Hey folks, Dan Frio here. The rate update. Today is September 1st, 2021. Well, we had some payroll numbers come in, and remember what we keep seeing is, well, if we hit 1 million new jobs a month, the Federal Reserve can start tapering. I got some good news for you, so don't go away. We'll be right back. Okay, so let's see what the headlines are saying about the ADP employment numbers.
Welcome back to Squawk Box. ADP reporting that private payrolls gained just 374,000, a disappointing 374,000 for ADP for August payrolls. July revised down to 326,000. That was a huge miss for ADP, with the government reporting more than 900,000. Okay, so goods sector did 45,000. That's okay in a normal world, not in a rebounding post-pandemic world. Service sector, 329,000. Again, very strong, but not as strong as we saw in the BLS report last month. Non-farm payroll estimate for this Friday, 720,000. So again, ADP coming in very weak. Looking at it by business type, 86,000 gains for small business, 149,000 for medium, and 138,000 for large. So it was spread across different types of businesses, but just again, not enough relative to the estimates that were out there either for ADP or BLS. Again, you look at it by industry, leisure and hospitality doing its part, 201,000, but that is off the pace that we've seen before. Education, health services, pretty good across the board gains by sector, but again, just not enough relative to what was expected out there. A word of caution, Joe asked about this in the last hour. So here we go. Here are the error rates for ADP. We looked at it over the course of the pandemic, the last 3 months. What you see is that before the pandemic, ADP's error was 65,000 per month on average. During the pandemic, if you take from March 20 on, it's 851,000 a month, which is huge. These are absolute errors, by the way. And recently, it's come down to just to 337,000 a month. And so it's been just way off, very difficult for a lot of indicators, not just ADP, to figure out what's going on in the economy during the pandemic. And very quick, if you look at it, the month by month, the two line charts, what we're looking at here, by the way, is as first reported, not the revised numbers. You can see it's up some months, it's down some months, but it's just all over the place relative to trying to predict BLS. So, Joe, put that in your pipe and forecast it.
I'm putting it in yours and throwing back to the high frequency data. The high frequency data that you talked about earlier, the ADP number that we have, and now the whether it's been accurate or not in recent months. So put all that together, and what do you think for Friday?
You know, I think you have some downside risk here. I wouldn't be surprised to see it in the 500,000 or 600,000 range. The key here, one of the keys, I think, Joe, is going to be that we are expecting a big influx of education workers. Unclear to me that ADP would actually pick that up. That could be on the government side. There is some, obviously, private sector education workers. But it's all very weird. We can't compare it to a year ago. We maybe should go back to 2019, but that doesn't really work. It's been very difficult to understand. Plus, you've got the drag on Delta. ADP saying that it's put a dent in the job market or in job growth. So it's just all over the place. It's been very difficult to figure out. I think, Joe, if you take a step back and say the market's general opinion is that things will get better. We don't know when, and we're happy, it seems to me, to say, okay, if not this month or next month, then 3 months from now, it will get better.
Well, as you see, we didn't hit 1 million, but the bad thing, or the good thing is maybe, is the ADP numbers are always completely wrong. I don't even know why they post them. Okay, so that's the first thing. Let me see if I can get my audio a little bit better. Okay, so let's get to the headlines, because what I really want to focus just today on is rates and where everything is going with rates. We know you get my feedback on where I think the housing market's going in regards to supply. I think we're going to turn the bend there. Only time's going to tell on that. But I've been also saying, the Federal Reserve is not going to really do anything probably for several months. And the reason being is we're not hitting those job numbers. What does the Fed say? Well, they're saying we don't really care about inflation. We care about the job numbers. Okay, so they want to see 1 million plus. We're pretty darn close to that jobs being added a month. Well, we're going to find out some more information on Friday, but the ADP number kind of gives us a little crystal ball into that. And you can see we fell way short of that. Okay, so that's, you would think the first thing is that's great news for the mortgage market. Well, then why did we get a rate lock? Actually, there was a rate lock. If you see it up here, there was a rate lock pushed out earlier today. I did not lock any rates in because I think it's premature. Because why? The job numbers aren't coming in. So the Federal Reserve is going to basically just sit on the sidelines. Well, the Federal Reserve, as we know, if you watch my channel, they don't control mortgage rates, but they do control other forms of things. And they also control the mortgage-backed securities market yield, kind of. Okay, so let me explain to you how this works. The biggest component of your mortgage rate is what's happening with the mortgage-backed security. It's a bond that trades on Wall Street that is the biggest component of your mortgage rate. Well, the Federal Reserve has been buying in the tune of $40 billion a month in that bond. Okay, so they're jacking up the prices because of their demand is high for the mortgage-backed securities. As they're buying, they're jacking up the prices. We know on the channel when the prices go up on the bond, the yields or the mortgage rates come down. So if the Federal Reserve isn't going to stop or start tapering anytime soon because the employment numbers just stink, then why would mortgage rates really change much? Well, we had an alert this morning saying, hey, lock in because things are going to go crazy. Well, they're not, and I didn't lock in anything. And you can see, basically, nothing happened today. The MBS market was down 2. Basically, this could be 0. We would have the same net effect on mortgage rates. So here's what's going on with the MBS market right now. This tells us what the price has done over the last quarter. Okay, so over the last couple weeks, we've had some stability here. You know, my job, I look at it as my job when you guys call, is I'm looking to get you into the right program and lock you in at the right time with the lowest fee structure I can possibly get you. So that's what our goal is. But our goal is to assist you. If you're looking for the lowest rate in the world and you don't care about the service, you don't even care if anybody calls you back, maybe I'm not the place to go. But if you want us to walk you through every step of the way and tell you what, why, when, and where things are happening, we might be your place. Especially if you're looking to buy a house, you don't want to sit there and wait maybe a week or two and say, is my loan going to get approved? What's going on with my loan? If you do everything on your app, your mobile app, I know my phone's not my app, you control or you monitor your loan all the way through the process. And I got clients today even, they're like, dude, I just got an alert that my loan just got cleared to close. When can we close? I'm like, it's closed tomorrow. So that's what's going on there. This isn't a sales pitch, but it kind of is. So I want to show you what's going on. So now let's get back to what's going on with the mortgage-backed securities market. We have these numbers here, okay? So it seems like every time the Federal Reserve would talk or do something, the market would kind of crash. And we had that back here. This wasn't here. This was basically a debacle on just everything and anything that could have gone wrong this particular week did. You had the Fed talking about tapering. You had employment numbers. You have the Delta variant really starting to cause havoc and things and everything. Since there, we had a nice little tight range right in here. I like this range. Okay, so that's what's going on. I don't see us really moving from these levels right here. I think we're going to be stagnant right in that area here. So let's see some of the numbers that came out today. As you know, as you saw and through the video we just showed, ADP payroll numbers were terrible. You know, we're 2/3 of where we thought we were going to be. Okay, and they also revised last month's not in a good way. All right, tomorrow we're going to have continuing jobless claims and initial jobless claims. This we're going to monitor as well, and then all this should correlate into Friday's unemployment rate and non-farm payroll numbers. So that is basically what I'm waiting for. I don't really care, and I don't trade or I don't lock people based on the ADP numbers because their numbers are horrific. Okay, so what happened today? Let's see what happened throughout the day. We had a nice rally into the market, and then it plummeted, and then we stabilized. Okay, so basically we were almost where we started the day. Okay, so when we went from here to here, there was possibly a lock or there was a lock request, but rates didn't even come out till like 9:30, 10 o'clock anyways. So there was really no net effect on mortgage rates today here. So now let's see where rates are doing. And I'm going to show you right here with proof in the pudding. These are today's 30-year rates for conforming jumbo FHA and VA. These are not my rates. These are rates issued by Black Knight They survey lenders all over the country to see what are rates going for, so we can at least advise our clients where they should be looking at. Your rate might be higher than this. The reason being is you might have a lower credit score. You might have a higher, what we call, loan to value. Your rate might be better than this because you have a great credit score and maybe lower loan to values. But if your rate really deviates from this, please be very cautious. So that's where we come into play. We help you, walk you through all the costs and everything in regards to your mortgage. But again, we're here to advise you and put you on the right path, mainly getting you into the right program. All right, so that's where the numbers are today. So the current rates here are 305, 302, 313, and 275, right there respectively of these loan types here. You can see the 1-day delta means 1 day change. Was there a change in rates? Nope. Because 0 basis points, -2 basis points, nothing. So basically nothing. You can see over the past week, any changes? Nope. Let me define what a basis point is. So for example, over here, 2 basis points. We're looking at right here, this number. That equates out to numerically 0.02. So think of it as 0. Okay, I'm not going to, 0.02 isn't going to affect your rate at all. Okay. Then you go to the 4-week delta. This is where we were a month ago. Rates are about 0.1 on average higher than where we were. Again, nothing crazy here. Let's say last month would have been, I don't have to go through the numbers with you. You get it. 0.01 isn't going to really make a huge difference in your payments or anything else. So that's basically the report today. I'm trying to get these a little more condensed because people are saying, hey, Dan, if you condense it a little bit, you're probably going to get more viewers. And I'm going to watch it more often because I don't have to sit there and watch 20 minutes or something like that. So give me your feedback down below. Let me know what your thoughts. We did have a consensus. I'm trying to do YouTube lives. I was trying to do one last week, but my computer was a complete mess. So I'm revising that. So I've been posting some things to ask you guys when you want me to do it. And the consensus there was in the evenings. So that's what we're trying to do. And I also sent out a post. What are you guys looking to do on the live feed on YouTube? And you want to talk about, is now a good time to buy? So I'm putting all my data together for that. That is coming up, I think, next week. I'll prompt you guys tomorrow on the date that's going to be scheduled on, and I'd love for you to join us. So again, my name is Dan Frio. I do the rate update every day. I'm a mortgage advisor. I'd love to be able to help you guys. If you're looking to buy, build, refinance, you're in forbearance, and you don't know what to do, please call us. How do you find out more about me and my team? Pretty simple. Go to the rate update. Here's what I'd like you to do. One of two things. Don't apply online. Okay, I'm telling you that. Don't apply online because we want to talk with you. It's not we're trying to upsell you on anything. We want to make sure we're picking your brain, finding out what are you really looking to do and why, and then help you structure it to put you into the right program. So if you would, give us a call at 844-775, or what most people are starting to do right now, they're scheduling appointments with us. Schedule a meeting. It takes you to this chart right here. It'll open up our calendar. Then you pick the day and time that you're available, you'd like to talk with us, and then let us know, do you want to do this by Zoom or by a phone call? Because I would love to do it by Zoom if we can, so you can meet us, we can meet you, answer all your questions. Maybe you can even show us your mortgage statement or some of the things that you have on your plate that you're like, Dan, can you help me with this? A forbearance letter. What's the outcome of that? So those are the things we would like to ask for you. So God bless you. I hope you like my channel. You find value in it. Please comment down below on anything you want me to discuss. But let me know, is evenings and is now a good time to buy? Are those the topics? And is that the time you want me to do the YouTube live? Because I'm looking to try to get a couple thousand people there, and I need you guys to help me on that. So thanks again, and I'll see you tomorrow. Bye-bye.